If you like what you see, if I can please request you to subscribe to my channel. Bonds have always been considered the most boring part of financial markets. They've just never been as glamorous as stocks and other corporate activities like mergers and acquisitions. Ian Fleming chose James Bond as the name of his spy because he wanted a name that was dull. Nick Carraway, who was the narrator in Great Gatsby, was a Bond salesman, once again conjuring up a dreary image. However, in my opinion, bonds are pillars of the modern financial system. They have funded everything from wars to agriculture to entertainment and cars. So what is a government bond? A government bond is a debt security issued by a government to support government spending and obligations. These are considered low-risk investments since governments back them. When the debt is issued by the federal government, this is known as sovereign debt. In the United Kingdom and Commonwealth nations, these are known as gilts. They derive their name from the fact that the British government would release these certificates with gilded edges. In Japan, they're known as JGBs. In France, as OATs. In Germany, as Bunds. And in the United States, they're known as treasuries. So are government bonds a risk-free investment? Since governments back these bonds, they're considered to have a very low amount of risk and correspondingly a low return. Government bonds are different to corporate bonds. In corporate bonds, companies issue these bonds and hence there is a much higher risk of default. The 10-year Treasury US bond is considered one of the most secure in the world. Pundits think of this as the riskless asset. So what about these investments? Government bonds offer a steady income stream known as a coupon, which is provided by the government to the bondholder. However, they do carry risk when interest rates increase. Fixed income can also fall behind when considering inflation. But why does Japan hold 1.1 trillion worth of US treasuries? And why does China own nearly $850 billion worth of US treasuries? Each country has its own reasons. For one, in Japan, rates on government bonds are low, and so investors may find the US yield to be far more attractive. China is an export-oriented economy. It runs a trade surplus with the US, which means it sells more than it buys from Uncle Sam. China uses those dollars to invest in US treasuries. So my question for the day is, what are treasury inflation-protected securities?